I want to talk about what I call reverse owner financing, a unique spin on what you do as traditional owner financing with your real estate investing business. But this is going to really help you guys, especially right now with where we're at in the marketplace. This is going to reduce risk, increase your scalability, and allow you to do more deals because you're not spending as much out of pocket as far as disposable income you need to do the deals that you're working on, because it all comes down to what comes first, the chicken or the egg, right? So we all know that saying. Curious to know what your guys' thought is. What comes first, chicken or egg? Put it down there in the comment box below. Now, same thing we're gonna be doing here with reverse owner financing. What comes first, the house or the buyer? Most everybody you will ever meet does it like this. House first, then buyer second. What about if you did it buyer first, then house second? How can that impact your side of the transaction, or as well the buyer side of the transaction? Because this is gonna benefit both sides. So I'm gonna break this down in detail, guys. I'm gonna kind of give you my take on it. This is a very unique strategy. A lot of these guys are gonna see this as a catalyst. You're gonna take it and run with it. And some of you guys is gonna go whoop right over your head. So I'm gonna try to go slow and not confuse you guys, okay? Traditionally, there's a lot of real estate investors that do a real estate investing strategy called owner financing, or also seller financing, where you are essentially acting as a private bank and you're selling a house, owner to buyer, owner finance the property, okay? Same thing the bank's doing, but you're acting as a bank. Now, here's how it's gonna look on the front end. You're going to market in the marketplace or buy a house off the MLS. However you're gonna do it, you need inventory. You need a house first. And then you're gonna finance it some way or control it some way. You can do this through a subject to owner finance wrap. You can buy it with owner financing and do an owner finance wrap mortgage. And guys, we have other videos on my channel. If you don't know what this is, just after this video, go to YouTube, type Investor Army, owner financing. You'll see other videos pop up. You could buy this cash with your own cash and then owner finance it and create a note. You could, some hard money lenders will let you wrap their interest only note. So you could also do this with the credit line. You can do this with private money lenders. Many different ways you can do it, but you have to control a property on the front end somehow, right? So you get the property, and then this is where you're at, closing. You've just closed on the property, okay? This is what I want to press upon you guys in this video. You've just closed on the property. Now what happens is what we call risk and expense. You owe somebody money because you have that somehow, or that property somehow. Somebody's needing to get paid for the control of the property, right? So you have a lender, somewhere there's a payment that you're making. Let's say 1 month, 2 months, 3 months, 4 months. The longer this time frame where there is no buyer in place and you do not sell a property, the more risk and more cost out of your pocket, the worse the deal becomes. Think about you house flippers. Once you finish the house and put it on the market, every month that goes by, you're making less, right? Because you have what's called carrying costs. And right now, there are a lot of people that got away with buying houses over the past few years. They're not getting away with it right now. And they're sitting on houses that they can't even find an owner-occupant buyer for. Now, if you guys can't find an owner-finance buyer, you just need to get out of that deal as fast as possible, any way possible before it hurts you even worse than it is right now. Not trying to freak you out, but if you're struggling to find a buyer right now, it's not gonna get easier, right? Now, good positive vibes here. Typically, when you go into recession or when you go into a stressed marketplace, which a lot of people believe we are, seeing that we're now cutting interest rates down to right around zero is what I was told just a day ago, or just pretty much today actually. Selling houses and buying houses on payments is one of the best strategies that you can do. So this is gonna be a huge opportunity going forward, but I'd like you to do it this way. So let's say then finally you sell the house, you get it sold. This was your expense or your risk to carry the property while you owned it or controlled it between when you sold it. Now, what if we avoided this and we found the buyer first? Okay, think about it like this. You're gonna have the same buyer, the same potential house, or the same typical numbers, but you're gonna find the buyer first. So what you wanna do, guys, is you wanna go out there and you wanna find someone with 10% down. So you wanna find the buyer first. Start marketing for buyers. You can do this running ads on Craigslist. You can do this putting signs around town, radio ads. You can do this with social media funnels, running paid ads, looking for owner finance, people that are looking to buy a house with owner financing. You start finding people with 10% down. Now, yes, you can sell a house with less than 10% down. I believe that it's the best to have at least 10% down. The more you get down, the better, right? I've actually had someone put almost like around $25,000 down on a 65K house before. That's a lot of down payment, right? Let's say it's a $200,000 house. They're gonna need $20,000 down. This is what you need to understand if you're gonna do this. You have to protect yourself somehow before you go work for nothing. This is where a lot of people get messed up. A lot of you guys have tried to do this before, where you have someone say, I'm looking for an owner finance house. You're like, sure, I'll go find you one. Then you go find it. Then you bring it back to them and say, that's not the house I want. Or they change their mind in general and they don't want to buy it, right? A lot of you guys are nodding along right now and saying it's very difficult to arrange this, the daisy chain of all this going together. Now, right here, what you're gonna do is you're gonna say, I'm gonna take your $20,000. In order to protect myself, and this is the way our business model runs, you're going to have to put this up non-refundable, or we're going to have drawn up in the contract by an attorney in your state, however you gotta do it, with a protection measure for yourself, so that if they do change their mind, or they go a different direction, or they don't buy a house from you, they have some skin in the game or some risk. I would say at least $5,000, right? Just like a wholesale deal. Why do you do non-refundable earnest money? Because it puts risk up, right? You need to have them have skin in the game so they don't just walk away for nothing. I would say if it's a $10,000 down payment, put it all up for risk. Basically, you're saying, I'm gonna give you this huge opportunity to buy the house you want, which I'm gonna talk about in a second, but if you don't, you have risk in the game. So this way you're only working with people that you know are serious, that you know are gonna perform and buy the house. Now, what is the benefit, like I just mentioned, for the buyer? They get to choose the house they want. Now, if you're an owner finance investor, unless you're doing heavy volume, usually you have one or two, maybe five properties in inventory at one time. So when you go in the marketplace, you say, here's my houses, you get a choice between a couple. And if you don't like them, too bad, I don't have any more for you. That puts a limited selection of houses that the buyer can choose from, which also limits, which reduces the likelihood that they buy one of the houses from you. So how do you open up the marketplace to a lot of inventory, or every house possible, as long as the numbers work? You simply explain to them, for putting up this risk, you're making sure, or we're making sure that we know you're gonna buy a house, but we're gonna give you the benefit of buying the house that you want. And not only the house that you want, but you can actually buy a pretty house or a nice house, a very clean house, right off the MLS even, if you do this correctly. So you're gonna sit down with them, you're gonna say, what can you afford, what payments, you're gonna back into it, you're gonna come up with the interest rate, the down payment amount, you're gonna basically structure a loan for them, kind of essentially you're pre-qualifying them, and then you're gonna go find a house for them in the marketplace. You can do this off for sale by owner sites, you can do this with your traditional marketing, you can go right on the MLS, and this is the big difference. Normally when they buy a house, it's some deferred maintenance house that needs work for equity in it, where they have to fix it up, and they don't have any options. So it's better for them, better for you. Now, you shop for the house and you find the house that they want. What's the next thing that you're gonna do here? So you need to already have planned ahead of time the front end side of the transaction. How are you gonna close on this property? You need to know the lender that you're working with. Is it okay that you can do an owner finance wrap? You make sure that you can wrap the loan that you're working with, the lender that with the lender that you're working with. Make sure that they allow you to wrap it. Can't even talk right now. And then, so now that you know ahead of time, you can close on the property and you know what they want. You connect the two. So now what's gonna happen is you're going to get the property under contract, you're going to close the property with whatever funding source that you want, setting an expectation to them ahead of time if there's gonna be a delay for the closing because of however you're financing it, depending on what type of financing you're gonna use, and then you're going to close it, a double close transaction. You're gonna buy the property, and then you're gonna sell it to them directly right after you buy it. This could be a wrap mortgage. This could be you just close on it cash out of pocket and create a note. Depending on what you're gonna do, are you trying to hold the property long-term for a long-term payment stream to create cash flow? Or are you trying to cycle your cash in out, close on it, and then sell the note and pull your cash out to go do more deals? So think about what this is gonna do. You're gonna avoid all this cost of capital while you're making payments up here, which means you have more money to run your business, which means you can do more deals. You're gonna protect yourself for the time that you're putting in, because you know that if they back out, you're gonna get some type of down payment. You're going to be able to allow them to choose from a bigger inventory, which means it's more likely that you find houses for the buyers that you're working with, and the timing doesn't get messed up, because you guys know if you try to do it the other way around, there's always a timing frame messed up. Just like when you're buying houses to flip, you may have a house ready, but your lender's not ready, and vice versa. When your lender's ready, your house isn't ready. So you can see by doing this, it's a little bit of a different twist. Now you need an attorney to work with you guys. I wouldn't try to do this on your own, and I would really make sure that you kind of play with these numbers ahead of time so you can do what you say you're gonna do. And then I'd make sure that the lender on the front end, or however you're gonna finance these deals on the front end, they know what you're doing. But if you can figure this out just a little bit and take a little bit of time to plan ahead of time and prepare ahead of time, this can be a lot better option for you with your owner financing business, especially in the marketplace right now where we don't know what's going on. We don't know how many people are gonna have money to bring us down payments. So you don't wanna be closing on a bunch of houses that are gonna sit there with no buyers. I hope you like the video, guys. Subscribe to the channel if you haven't done so. I'll see you on the next one.